Finally, we're getting some dollar strength after trade war fears start to pull back a bit. How much further can a dollar go? We'll talk about it here at Capital Markets. Traders, welcome back guys to another Capital Markets video. I'm your host Cleveland Bishop, and in these segments we like to talk about the fundamentals and the technicals, so make sure you guys are subscribed if you're new. And if you guys ever have any questions, comment down below. I'll be right there to answer them. Okay, there's a lot going on in these markets from a technical perspective and from a fundamental perspective, and things can get a little bit confusing. So throw your questions down below and I'll be right there for you. Okay, so this week we've seen a rally in the dollar, okay, especially in today's session. The dollar has pushed over 50 points. If you look at the dollar index, here's a quick screenshot there, and that has affected all of the US dollar crosses except for the CAD. CAD has had a hard time pushing higher, but that euro, the GBP, and the Aussie have been seen all starting to sell off because of that strength that we're seeing over there on that dollar. So how far can it go? You know, how much has this been priced in, this trade war fear, right? Because that's why we're seeing markets actually pull off of it, okay? Because technically nothing has been implemented as of yet, right? $50 billion of trade flow from the US to China are looking to be tariffed, okay? And same thing when it comes to Chinese exports to US dollar exports. As you guys know, 25% aluminum tariffs, 10% steel tariffs, but nothing has been enacted quite yet, okay? So technically, there isn't a trade war, but again, if they want to start making these accusations policy, then definitely you will see a dramatic sell-off, and that's when the back and forth can start to happen, where you say, okay, you're going to tax me on these products, well, I'm now going to tax you on these products, blase blah, right? So the US dollar is operating, the US is operating at a $500 billion deficit to China, okay? So this is why Trump has been saying again and again, hey, the Chinese, they're doing a lot of manipulation of their currency, right? They were printing a lot of their currency in the early 2000s, and they even started printing in the 2010s plus, and that again devalued the currency dramatically, giving them a lot of opportunity to export their goods for very, very cheap, okay? And so Trump has always viewed that as being unfair, an unfair advantage in terms of the whole exports and trade operation that goes on globally. And so that's why they're now, you know, going along with the tax, the proposed tax on those goods. And if we see these tariffs executed, then you're definitely going to actually see a hit on the US exports and on these Chinese exports. But predominantly, what are the Chinese targeting in terms of exports from the US into China? Soybean is one of them. The agricultural industry is a massive industry, and the backbone of the agricultural industry is really relied upon China. China is the main exporter and the buyer of agricultural goods from the US. And that's the whole thing about a trade war. You start taxing these goods of products coming into the United States, that's going to be hurting a lot of the buyers of those goods in the actual country itself. Okay, so we're gonna see how that plays out. Currently, right now, they're pulled back a bit. Some of the White House administration has said that, hey, look, you know, we're not in a trade war yet. This is not a trade war. Trump actually did tweet, hey, we're not in a trade war. The war was lost years and years ago. So potentially there is gonna be room for negotiation. We'll be waiting here at Capital Markets next week to actually see how these markets play out. And we'll see how the administration takes on these claims of the trade war and how they're gonna step back from it and establish themselves as an economy that, hey, look, we're not trying to do anything too irrational. Trump makes, you know, quite the bit of irrational statements that he has to sometimes pull back from, that the White House has to say, hey, that's not what we meant. We're going to see what they can do in regards to the tariffs that have been enacted on China. Okay, but until then, we do have a lot of data coming out tomorrow. We have NFP coming out tomorrow. We have unemployment claims coming out as well. That's going to be some very pertinent data as to exactly how the growth of this economy is performing right now, right? So we've been doing quite well. GDP last week came out quite positive. Retail sales a little bit in the red, but CPI and PPI, again, 2 weeks ago, both came out positive. We're going to see how that has affected the job market, right? So with non-farm payroll, really, again, we're just rationalizing how many participants in the labor force are coming in versus how many participants in the labor force are coming out. Every time we get a positive job market reading, that means that the amount of people that came into the labor force is more than the amount of people leaving the labor force, right? So we have a lot of individuals that are over 55 that are retiring and things of that sort. But lately, we have a lot of millennials, a lot of Gen Xers that are coming into the labor force, replacing them, keeping our economy strong. Again, the number that we see tomorrow is going to help us have an idea as to if that trend is going to continue. And NFP has come out quite well in the past few months, right? The only thing that market participants are looking at are how far is NFP going to really exceed the expected reading, and that's going to give market participants, again, an idea as to where they want to trade this dollar. Or are we going to get this continuation here? Okay, so moving on from the dollar, let's talk about the pound. Pound still somewhat stagnant after 2 weeks ago, those Brexit negotiations coming out. Remember, Brexit was something that was supposed to be all wrapped up in 2019 Q2. They gave it an extension. Okay, so many market participants were assuming there was going to be a continuation, that there was going to be a continuing pricing out the fear of Brexit, but there has yet to be that continuation. The pound has stalled at those highs from where the markets left off, and again, that gives you some really good advantages as to say, okay, will these markets pull back a bit, giving you a chance for a better entry to take those markets back higher, again, assuming that, you know, Brexit turns out to be soft Brexit. We want to see if there's a soft Brexit, right, a coming to terms to the UK and the European Parliament, and maybe they can meet to some agreements and say, hey, look, you know, it's best in our interest to be out of the European Union, but we still want, you know, some of the benefits that we had when we were inside the union. Okay, it's going to be pretty important for us to check out, right? So from a technical perspective, dollar again hit really hard. All right, here's the dollar index over the course of 2018. You guys can see all Q1 was massive dollar selling. We have consolidated. Okay, for the past 4 or 5 weeks, we've been sitting down at these lows. This is why many market participants are looking to see that dollar push higher. Okay, but what's stalling that dollar push higher is the euro. The euro has been somewhat stagnant, right? The euro inflation has been one of the worst performing economies in the G10 overall. Euro has not seen a lot of inflation, and that is really what's been keeping this dollar at this point. If it was for the euro to get any stronger, then we would have already broken sell side on the dollar, and we would have moved a lot lower. But thankfully, the euro is having a hard time continuing in the directional move that Draghi was mentioning that he would hope the market would continue in earlier this year, right? So remember, they're doing a quantitative easing policy, right? They're printing around $33 billion every single month. Are they going to wean off of that, right? That is the plan, right? By 2020, they want to see no more demand push inflation where they're literally printing money, hoping to see more money circulating in the money supply. They want to see cost push inflation where they see consumer prices going up because there is more consumer spending. Okay, that is the plan. Hopefully they can see that happen by Q3 of this year, folks. If they don't see it, I think we're going to see a massive hit. Over there on the euro, euro targets for most analysts have been $1.30. We're not going to hit those targets if we don't see the inflation we need. All right, so let's keep an eye out on it there as well, right? So again, if you guys ever have any questions, comment down below. And if you're new here, welcome to the channel. Make sure you guys are subscribed. In capital markets, we're one of the top brokers in the entire industry, right? We have some of the tightest spreads, and we route from some of the best liquidity providers in the entire industry. Go to the description below and head over to capital-markets.com to get your account started today. I'm Cleveland Bishop. I hope to talk to you guys very soon.